What's going on, everybody? It's Matt, aka the Lumberjack Landlord, and hot off the presses, this just happened yesterday. Surprised all the Crash Bros haven't caught on to it yet. But one of the things that a lot of investors look at is the median sales price of houses sold in the United States. That's a number that's updated every single quarter. That's the number that's continued to rise through all of the noise in the market. Now, I had brought to you a theory probably about 90 days ago or so. And I said, what's going to be very interesting is over the course of the next year, as luxury transactions and move up buyer transactions start to disappear because they are rate sensitive, like you read about. And somebody says, I already have a house. I already have a 3.5% mortgage or a 3% mortgage. Why would I pay a 7% mortgage for maybe an extra bedroom? Doesn't make a whole lot of sense, especially with prices still elevated. So my theory was when you track median homes, that's literally, if you look at 100 transactions, it's the one right in the middle, right at number 50. That is the median sales price. So my theory was that you would see a lot of the higher end or luxury transactions largely disappear. Because with the rates being what they are, you might be able to do cash buys. A lot of that stuff still can go cash buy. However, you look at the next step down, which is usually still not a cash deal. It's usually a finance price, which is that next category of move up buyer. So they're looking to add a house, add a bedroom. They're looking to do something like that. The problem that they have, and you've seen me talk about it a lot, is when you have a 2.5 or a 3% mortgage, why would you ever trade that for an extra bedroom? In many cases, this is where you saw the boom in permits. And this is where you saw the boom in all of these different tradesmen being out straight and busy, is because people recognized they couldn't take that step into the next building or the next house up because it was going to cost them literally thousands of dollars just to add a bedroom a month on their mortgage payment. In this particular case, it gives people the ability to add on that bedroom onto their existing house, do some construction there. I started to put together these numbers and these ideas and concepts based on the fact that I'm in my market every single day, talking to brokers, talking to agents, talking to construction guys, seeing what I'm doing myself, watching the different projects that are happening, because we drive a lot of neighborhoods driving for dollars. It's amazing to see, but feel a little bit vindicated this morning because everyone's like, that's not really how it works. That really is how it works. Median home prices is the transaction in the middle. So if you sell 100 homes, it's what was transaction number 50, the one smack dab in the middle. And so my theory again was that these luxury home sales would drastically slow. Same with the move up buyer, not fully disappear. That's a little bit of hyperbole. It's more, they would vastly soften. And so when I was looking at the Vegas market, what I was looking for was, I couldn't afford a $2 million home, but I was looking at them. The reason that I wanted to look at the $2 million homes is because I believed that that buyer was going to largely disappear. And it's happened a lot. Like, we saw transactions in that space when I was looking just about 60 days ago. We saw the number of transactions in that price point down over 40%. So the activity dropped vastly. It was crazy. But the median minus is what I call it, which is, what's the median price in your market? Anything under that, you're actually seeing pricing pressure. You're actually seeing prices go up. You're seeing that entry-level buyer, or that person that says, we just want to get into a better neighborhood, or we're renters and we're first-time buyers. You're seeing a lot of that market still on fire. We had just last week, we had what's called, again, a median minus home, which is look at the median price and below that median minus. 65 people were at an open house last weekend. Now, it ended up going for another, I think, about $20,000, $25,000 over ask. It was still a median minus home, but it was up. It was up $25,000 over asking price. So my theory continues to hold water. It continues to come true. As you guys had heard last year, I was the guy who was calling for a 10 to 20% drop in the market. I still think we're going to see a 10 to 20% drop in the market. The issue is that what really is it comprised of? I want to show you guys a graph real quick because I think this is hugely important. I think this will really share with you folks exactly how crazy this actually is and the speed by which it moved. So here we go. Just going to adjust my screen a little bit, but here it is. As you see, it's making the long slog up. So in Q1 of last year, it was 433. In Q2, it was 449. Yeah, 433, 449, 468. Meanwhile, the entire time, everyone's calling crash, crash, crash. It's going to crash. It's going to crash. It's going to crash. Nope, still no. It just shows you timing the market. People can't do it. And then we look up here, 479.5. That's where we got to. Now, that's where it was Q4 that was reported in January of this year, January of 2023. That's when I said, hey, I think the phenomenon we're going to be looking for is the median plus, just over a median, which at that time was 479. That's the part of the market that really started softening. It was the more expensive homes, the move up buyers that now were locked in at a 2.5% or a 3% mortgage in the very beginning. They're now seeing that they can't afford to make that jump. They're better off doing a construction loan on their house and adding, $100,000 addition, because at least on the addition, there's only debt on the addition at this new higher rate. Their core rate on their property is still significantly lower. It's still 2.5% or 3% as opposed to 6 or 7. This is what I've been talking about. Now you see, here's where we actually went in one quarter. 436.8. Now, I'm not breaking my arm, pat myself on the back yet, because this isn't still 10%. And again, I think it will continue to unfold, but what is the data? What is the construct actually telling us? What it's actually showing and telling us is that median prices, the median minus homes, are still selling because there's still no inventory and they're still flying off the shelves. There's still pricing pressure there for buyers. There are still, now that it's the spring season, I can tell you all of the median minus stuff was packed. I jumped in my car. I did a drive-by 3 or 4 places and they were packed. There were lines outside, but they were median minus. I also looked at some stuff that was median plus and, getting into it, so this graph was saying 479. I was looking at stuff in the 6s and in the 7s. They were dead. There weren't any buyers there. I drove by the open house and you could tell it was basically an agent's car. But I saw 1 or 2 cars there. I didn't see these other places, the median minuses. There were cars lined up on the roads, like frenzy style. So what I believe you'll continue to see happen is I think the median price will continue to drop, but it's not because of the value of the median minus homes. Those are still going to go up. So what you're eventually going to see is that median minus will start to buoy up. And the reason it will start to buoy up is because right now, the major part of this chart is, and you don't see it here, but the data is that a lot of those luxury and move up buyers have disappeared. Certainly what we talked about is the white collar recession. We've talked about a lot of these tech jobs disappearing. Well, those are a lot of the big deals. In a lot of markets, that 7-figure and above house, a lot of the US isn't in that market. And so that's a higher end market. I can tell you those transactions have slowed down a lot. And if they're not there to be counted, then they're not there to help keep up the median price. So what I wanted to make sure that I shared with you guys in this video is, one, most importantly, is that this is not a market collapse. This is a collapse of a sector of the market. Because here's what I can tell you. Price per square foot on median minus homes in my market is up higher than it's ever been. Price for small multifamily, we continue to break records with almost every sale continued. Why? Because people are looking at the cash flow that they get on the asset. So what I would tell you is, lastly, most importantly is watch what you're trying to buy. Watch what you're trying to understand in your market. Because I can tell you almost across the board, small multifamily is up. Median minus homes are up. And there's a lot more competition, even with rates being what they are. They aren't in the 7s anymore, unless you're an investor. And some investors are still getting stuff in the 6s, but you're consistently in the 5s and low 6s. However, that's still below the average mortgage rate over the last 20 years. So I would tell you to take heart, continue to do your research, but when you see graphs like this, understand what the underlying data is actually telling us. Because too often, people look at a graph like this and they say, see, it's down almost 10% in one quarter. Yeah, it's right, and it makes me right. However, what is the underlying data? And really the core of the underlying data is that luxury transactions have largely disappeared and the move-up buyer has largely disappeared because they are being priced out by higher rates and the fact that houses have not gone down enough to really account for what we all need, which is price depreciation based on the fact that rates are so much higher. And then lastly is, of course, people getting laid off. Although people make a big deal about all these tech layoffs. And hey, if you're one of those tech people like I am, getting laid off, that's horrible. It's a horrible thing to have to experience. But it's one sector, and it's one sector that we're seeing most of that focus of layoffs. And it's because those companies grew so crazy fast during, the great health event. So hopefully you find this information valuable. Make sure you hit that like and subscribe button and check out our live streams and Instagram, Lumberjack Landlord. Thanks so much, everybody. Look forward to seeing you again. Take care and all the best.